All right. Oh, 6 likes. Hey, I'm glad that you guys are glad. I'm glad that you guys are glad that I'm back. But welcome to this week's live stream. This is the first live stream of the very, very short trading week. So again, if you guys didn't know, I don't know how you wouldn't know, but today was the first day of trading for this week. And we're only going to be having 4 trading days from Tuesday to Friday. So we're going to be on a regular schedule for the streams, Tuesdays and Thursdays at on Tuesdays and Thursdays at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time for anyone who is new here and if you guys do not know the regular stream schedules. All right. So let's begin. I'm sure people are getting their notifications in now that I am live. And again, if you guys aren't subscribed yet, make sure you guys hit that subscribe button so that you guys are able to talk in the live chat room as well. And also if you guys want to react, and hey, well there it is. There's some reactions coming in now. So that's something. And obviously, so that you guys can chat with me in the chat room, but at the same time, make sure you guys hit that notification bell too once the subscribe button is hit. And again, the notification bell will only come up and pop up once you hit that subscribe button. All right, so oops, hit my mic there. So yeah, so we'll begin now. So if you guys did not read the description box, I don't know how you wouldn't have, or even the title, we're going to be talking a little bit more about the volatility, right? So I've been mentioning a lot about market volatility in the past couple of trading weeks and even the past couple, I would say 2 months or so. And okay, I just have to make sure my sound is okay. And so, you know, I think volatility is going to be one of the major topics that we're going to be going back to a couple of times this entire fiscal year. And you know, first of all, we have the S&P 500 ETF chart here, and also we have the volatility index of the S&P 500 or the VIX right over here. And we're going to be talking about these 2 tickers here tonight and going over some different ways that you guys are able to, or you can protect yourself from possible expansions in volatility and even contractions in volatility as well, depending on whether or not you're long or whether you're long or short respectively. Okay, so again, when we are looking at an expansion in vol and you're long, then you need to look for some protection against that expanding volatility, that overall expanding market vol. Or when you are net short and we're seeing volatility contracting, right, you need to also understand how to protect yourself from that contraction of the overall market vol. And so that is what we're going to be attacking today, tonight, and be going over and just kind of figure out you know, what the next steps are in the overall markets and where the overall volatility index can go. So first of all, today, let's go over the S&P 500 today. So today, obviously an amazing push-up higher after hours too, largely due to the fact that we had such an amazing earnings reaction from Netflix, and I believe they're up like 15% after hours if I'm not mistaken. And SPY moved a little bit. It's above 604 right now in overnight trading hours, but I want you guys to notice something, right? Because we tend to see a peak in the average volume here that's forming now. If you take a look at this orange line here on SPY's volume bars here, this is the average daily volume line. And since since last Friday, we had a peak in this volume, the average volume, and today we got a lower volume bar compared to last Friday, and that is what's caused the average daily volume line to start to decline. And I take note of this because after a day like today, where we had a nice fat gap up and then another push up higher, and obviously a close over a very psychological, important, significant whole number level of $600, that gets you, scratching your head. Hey, maybe this overall oversold and obviously a very much needed bounce from 575 after filling that earnings gap up, obviously. And again, if you guys haven't watched the video from last week, the technical analysis video for the CFO Swing Watch report, make sure you guys watch it because my technical analysis was absolutely on point. I'll leave it in the chat room here in the stream. So again, that video really just was on point because I nailed. I mean I'm 100% allowed to say this for myself because I absolutely nailed the bottom and obviously the targets for a bounce up, and obviously the markets over exceeded my targets here. So here is the video. Okay, right, I'll share it in the chat room. Right, and then the following stream after that video was uploaded. Okay, I also gave you guys an update to that analysis. All right, so the first link was the then private but now public CFO Swing Watch report video from last week's report, and I really just went over the technical analysis on SPY, and I was absolutely on point. And then the next link that you guys see there, the second link, is the follow-up on Tuesday, right before the CPI report came out on Wednesday of last week. And so make sure you guys watch these two videos because it'll tell you how I was able to figure out that there's going to be a very good pivot, but obviously the market over exceeded my expectations through my analysis, right? The expectations I've already had through this analysis. And so now I'm going to give you guys a new update. Okay, a new update on both of those two analyses that I've given in both of those two videos. So again, make sure you guys watch those two videos. Okay, it's very crucial that you guys understand where I'm coming from tonight. So with the S&P 500 obviously having a nice big jump up higher, we're kind of extending this rally now. Yes, market breadth has recovered significantly. Yes, we have went over the previous pivot high points like we saw last Friday, and on this candlestick on January 6th, and also on this candlestick as well on December 26th. So today's close was significant because it closed over all these three previous pivot high points, and we have yet another previous pivot high point to take over, which is the current all-time high price print sitting at $609.07. So there's that, right? Now here's the big question. Are we going to see another retest of the current all-time high resistance level sitting at 608.50 and another retest at the current all-time high price print? Well, that's up for debate, right? But here's the thing. Right now, the main thing that I'm concerned about, the one major thing that I'm concerned about is volatility. I don't really care if you decide to come up to the all-time highs or even make a new all-time high in the next couple of weeks, maybe into mid-quarter one. I don't care about that. All I care about right now is volatility. Why? Well, first of all, today was a great example. Okay, today was a great example because as the new presidential administration came in, the now elected President Trump began to do his, first 100-day executive orders, right? This is probably the most important part of a new president. And based on his words, on his even just demeanor on some topics, can drive markets to the upside or to the downside very, very quickly. We've seen this in 2018 and 2019 as well, where the trade wars were at their peak, right, with China. And if you guys don't remember that, well, just go back to the market action. I remember it because I was trading at that time too. So that is one concern, because today, we were in a ticker called ARM, ticker symbol ARM, and we had some very, very good news from SoftBank, right? Donald Trump said he will be investing $500 billion into AI infrastructure and just overall AI, right? The topic was AI. And so SoftBank was going to lead that investment, if I remember correctly, after reading the report. And we saw tickers like ORCL, ARM, which is heavily owned by SoftBank, right? Began to move up higher. They literally just bounced up higher at the low of the days, and just continued to move up in strength even after hours as well. Now, fortunately for us, it was a major swing trade idea for this week's CFO Swing and Watch report. Now, why am I telling you guys this, right? Because, well, this was a fortunate news event that was able to help us with our current swing trade idea for this trading week. But this got me thinking, what's going to happen if we're looking at individual tickers to either long or short, and then a news like this comes out in the middle of the trading day? And that is the type of volatility that we need to expect in the next 4 years, because that's exactly what we saw in Trump's first presidential term. His words moved the markets. His words literally moved the market, and it's complete craziness. I mean, that's not even. I'm not even judging him. I'm literally telling you guys that his words will make the markets very, very volatile and make the markets very uneasy. He's very good at that, right? And this might be some great news for day traders, but for me, like swing traders, this is not good news, right? Even long-term investors, because his words can immediately move the markets overnight or during live market trading hours. And so, again, fortunately for us today, ARM, ticker symbol ARM holdings, we're long on it, and fortunately the news was positive. But then again, what if the news was negative, right? We would have been completely caught on the blind side, and his words would have caused us some losses, right? It would have caused some losses for us. So again, these are the types of volatility that we need to consider in the next 4 fiscal years. Right? It's going to be hard, but this is the type of market condition and situation that we need to adapt to, which is the reason why I want to talk about protecting yourself from market vol. So let's go over the market vol now. Okay, so right now I think we're getting a bit overextended, so that's my take on this right now. Tomorrow we might be seeing a kind of a small blow off the top moment where we see some amazing profit taking coming in for a lot of short-term retail traders who got in late today after the inauguration, and obviously the executive orders being signed today as well. And so tomorrow we should be seeing some sort of a red day for at least a solid consolidation day to fully understand what has happened so far from this huge pivot from 575. Okay, and again, as a reminder, please watch the 2 videos that I have linked in the live chat room below or to your right. Okay. Make sure you guys are understanding what I'm saying. Make sure you guys let me know if you guys don't understand something. I'll make sure to clarify what I've said, but please make sure you guys always keep it in the chat room so that I can see it, right? Yeah, obviously you guys can speak directly to me, but you guys can write it in the actual chat room. All right. Okay, so let's take a look at VIX. Okay, so VIX right now is back to historical lows. So if you guys didn't know, just from a historical perspective, the VIX tends to range and sits at a range around 12 to 15. And today we are finally at that major 15 value. And is this good? Of course, right? Everyone is so bullish, right? Everyone is bullish. We're starting to see the markets continuously moving up higher, and the VIX continues to contract. And overall, we are net bullish, right? We are net directionally bullish to the upside, right? And that's great for us. However, here's the thing. Because whenever we do see the VIX coming down to this value of 15, we want it to come back down to the range, the historical low range of 12 to 15. However, whenever we do see a hit at 15, when we come back down after a brief period of expansion, and we start to see a rapid contraction to the downside again as the markets continue to move up higher, right? Obviously, the VIX and the S&P 500 are both inversely related here, but obviously this is also talking about and giving us data on the overall market vol. We're starting to see market volatility contracting as the market moves in one direction, right? And we're starting to see what we should be seeing, some more tighter price ranges every single trading day in the overall market as well, right? The benchmark S&P 500 market. And that is where I'm getting a little bit concerned, because with the incoming presidency and the fact that we're seeing volatility already in individual names, I'm going to be a little bit sus on the fact that a lot of people are not expecting volatility, right? Because a lot of people are saying that, hey, we're just going to go straight up like we've been for the past couple of days, right? As we're leading into the inauguration, obviously after inauguration today. And that's gotten me a little bit worried because, again, from a historical standpoint, whenever we do come back down to this value of 15, we do indeed come back to the range of 12 to 15. However, on the initial test here at 15, we do see a spike in volatility once more. And that is where you can consider some SPY puts, right? Because again, even if it's just a simple digestion of this massive rally up higher, you can still play SPY puts for 2 to 3 trading days, or even just as a day trade, right? If you guys want to just have a nice scalp or a day trade, fine, that's on you, that's your trading style. But for me, I want to either stay hedged, or if I could swing SPY puts, because I'm expecting market volatility to expand. I can expect the overall S&P 500 to start moving down and at least pulling back to consolidate this massive bullish run up it has had for the past 7 trading days, including today, right? Or 6 trading days, right? 6 trading days, including today. So to me, this is one way to currently right now, okay, as we're talking, right now, one way to protect yourself from a potential spike in volatility. Now, here's the thing. What if we can see a potential large spike, a continued rise up higher highs and higher lows on the overall VIX? The overall market vol expands. What happens then? What should we do then, right? Obviously, SPY puts are still a great choice, especially long-term ones like the current ones I have that are in the April expiration. You guys can guess which strike that I have. Obviously, it's out the money, but if you guys want to know the exact strike and exact expiration date, please join the CFO Swing and Watch report and become a member of the private CFO Discord member chat room or community. Okay, and again, just as a reminder, if you guys become a reader of the CFO Swing and Watch report, you guys are automatically turned into a private CFO Discord member. All right, just as a reminder. Okay, so now, again, that SPY puts is a great thing to utilize as well. However, if you guys think you guys cannot hold any type of puts on the indices here, here's one ticker that I always go to. SPXS, okay, which is the, okay, let it load here. The daily S&P 500 bear 3 times leveraged ETF, okay, which is obviously the inverse of the S&P 500, or I take a look at SQQQ, which is the inverse of the NASDAQ, the QQQ, ticker symbol QQQ, right? So this is basically inverse tech, okay? So now, why did I choose these? Why did I choose the inverse tickers? Well, because these are also a great way to be long market vol, right? Obviously, you can just choose to long VIX. That's fine too. I believe Robinhood has also allowed index options and even on volatility products as well, like the VIX. So that's great. So you guys can just long VIX. fine. But if you guys don't like that, right? If you guys want more liquid positions, you guys should choose these inverse leveraged ETFs, okay? And so SQQ is my always go-to if I want to short overall tech, and SPXS is my also go-to for the overall S&P 500 if I do not want to choose the S&P 500 puts. Okay, and so these are great ways to protect yourself from potential volatile conditions, right? When we're seeing overall market vol expanding, and again, these are great ways to a great vehicle to be, exposed to that market volatility if you can't play VIX. Right, if you don't know how to play VIX options, if you think they move a little bit weirdly, well, you have your options. You have a lot of options actually, right? Like SPXS and SQQQ. Those are the major tickers to be looking at. And so currently right now, I wouldn't try to get these. Okay, I wouldn't try to get these inverse leveraged ETFs. Now you might be, scratching yourselves in your heads, right? You're like, wait a second, Andrew, you just told us that the VIX could be possibly popping since we have our initial retest at 15 here. And yes, we do see once the VIX comes back down to 15, it continues to go lower, and the VIX continues to contract until we get a range between 12 to 15. That's the historical range, right? The low range of the VIX. Right, so yes, I did indeed say that. However, I am not expecting the VIX to continue to just suddenly rise up higher and higher and higher for days and weeks to come. So there's no need to be exposed to this type of instrument here, like the inverse leveraged ETFs like the SPXS or SQQQ here, to be exposed to protecting yourselves from expanding market vol. Does that make sense? Right? And so right now, I wouldn't be, there really is no need to be looking at this. And I would much rather, like I currently have now, be hedged through the S&P 500 puts. Okay, so that is one great way to kind of determine whether or not you want to use puts or these inverse leveraged ETFs like SPXS, right? If you don't want to use SPY puts, just use SPXS calls. Right? If you want to be exposed to expanding market vol. But then again, currently right now, our current situation is, well, the market is strong, right? I'm just expecting some sort of a pullback, just a little tiny pullback. Maybe tomorrow is the day. Well, I'm expecting that. Let's see if it happens. But again, my analysis has been absolutely on point throughout this entirety of this bounce up higher into last week's OPEX and LEAPS expiration, along with the overall pivot F575. So again, make sure you guys watch the videos that are linked in the chat room here, in the live chat room down below or to your right. The very first link and the second link are very, very important. So please, 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 I urge you guys to watch it, right? And again, people are always asking me, hey, are you guys, what are you guys doing at Charts Focus One? Or what are you guys looking at, right? Well, you guys have your options here, right? You can look at my YouTube channel, you can look at my Instagram, you can be looking at my Twitter page, you can be looking at my Threads page. All the information is there that's publicly available. And I'm saying that publicly available because we have a lot more private information that I provide for my CFO Stream and Watch readers and private CFO Discord members as well. Okay, so that's a little asterisk there. But again, if you guys want some very good basic guidance, not in detail guidance, always watch my videos, especially when I recommend it to you guys like this in the chat room. So make sure you guys watch these two videos. Have it open right now. If you guys haven't done it, have it open right now. All right, and you guys can watch it once this stream is over. Comprende? Just one little Spanish there. Okay. Wow, this lavender latte is very good. Nice and warm. All right. So, as we're talking about a warm lavender latte, what was I trying to say? Oh yeah. So now let's talk about the opposite side, right? So what can you do? What can you do when the overall market vol is contracting like this, especially after a massive run up? Well, the answer is pretty simple. You can simply long the markets, right? You guys can long SPY, long QQQ, long DJI, whatever you guys want to use, whatever. Maybe you want to use index option calls, whatever you want. Now here's the thing. Okay. So whenever we're seeing market vol contracting, you guys can actually go right back, especially when we're seeing the current situation right now. We're seeing massive market vol contraction for multiple days at a time, consistently at that too. You can also go back right to these instruments here, these leveraged ETFs, these inverse leveraged ETFs, right? Like SPXS, and you can use puts on these because you'll be exposed to that market contraction. Do you guys understand where I'm coming from here, right? So we have exposure to market expansion and also exposure to market contraction based on the current market environment and based on how the overall VIX is moving. So right now for me, okay, as a quick review, okay, and this is a current analysis right now that I have for you all. It's just basic information, but I have more detailed data and information coming through for my members, obviously. And so right now, tomorrow, I wouldn't mind if the VIX makes a quick trip back down to around the value of 14, maybe revisits the low here back in December 24th, right at the turn of the new year, and comes back down and has a nice little tiny pop back to the upside. I really wouldn't mind that because, again, that would just mean that, hey, we're going to be seeing volatility potentially increasing in the short term, but at the same time, we can use this opportunity to have the markets basically pull back, right? Pull back and consolidate. I was hoping that one of you guys will be able to type something out in the chat room, but it's okay. So that is kind of what I'm looking at for tomorrow. It's as simple as that. A lot of people tend to make things a lot harder on themselves with protecting themselves against market vol, but it's protecting yourself against any type of market expansion, market vol expansion, or market vol contraction is doing harm to themselves, right? Because professionals know that protection is easy, right? Protection is easy. It's very, very easy. And based on my experience as well for the past 8 years now. Wow, it's been 8 years. Almost a decade now. Market vol protection is possibly the easiest thing to understand and also the easiest thing to execute, because whenever you are way too leveraged to one side, if your net direction is way too bullish or way too bearish, there are ways to protect yourselves if overall market vol expands or contracts, right? Relative to where you're leaning towards, right? Where you're net directionally bullish or net directionally bearish. And so when it comes to overall market vol, okay, the only way for you to really understand how things are going with the market volatility is by looking at the VIX. You need to understand how the VIX works and how it moves, right? Especially when it comes to the options market as well. And I provided a lot of information on OPEX, leaps expiration, especially last week. So if any of the current members are watching this stream right now, either currently live or the actual replay, go back to the report from last week, and also on top of that, read thoroughly and also watch the technical analysis video from last week's report that came with it. Okay, and again, for anyone who's just watching the stream now, the TA video from last week's CFO Swing and Watch report is also linked in the chat room right now. So make sure you guys watch these two videos in the chat room. It's very, very important and crucial that you guys watch these two videos before the market opens tomorrow, so that you guys can understand why I am saying these things right now, tonight. Does that make sense? Please let me know if that makes sense or not. I think I'm seeing... Okay, I am seeing some reactions there. Let me see some more. I need some more confidence here. All right, perfect. There we go. There it is. Okay, so again, I am currently, I may be a bit biased, but I am currently hedged for any possible large pops in volatility in the next couple of months. I told you guys already, I have an April expiration on the S&P 500 for puts. I'm not gonna tell you what that strike is. You guys can find out the exact strike once you guys become a reader of the CFO Swing Watch report and and become a member of the private CFO Discord. And Joel, thank you so much for a message. You said, I'm going to watch the TA video after this again. Been with charts focus one for a while. Just saying, Andrew knows his stuff. Tons of value. Yes, I can actually say that as well for myself. So thank you, Joel, for saying that. But for anyone who's new here right now, or if you guys have just been lingering around and just watching me here and there, you guys should really just join the report. Just become a reader of the report and become a member of the privacy of the Discord. Those two things come together for a price of one, and you guys can actually have an opportunity to join this week for 50% off for your first 30 days. And again, I've been constantly saying this. You guys will not regret it. Just from reading the report alone, you guys will not regret it. Not just let's take out the technical analysis video, or even just the private CFO Discord community. You guys will absolutely 100% guaranteed learn and earn through the CFO Swing Watch report. I mean, today was a great example with this week's swing trade idea, the major swing trade idea, which was ARM. We had a massive move up higher. My alerts came in right on time. I executed and I was filled, and bam, perfect move up higher. And I believe after hours we're hitting 160 as well, which was one of my major profit targets for this very short trading week. So again, this current private CFO Swing Watch report technical analysis video will be live tomorrow, so you guys can check that out after the stream is over on my channel. It is going to be uploaded tomorrow. I believe, let's see, it's going to be uploaded on 7 o'clock tomorrow Pacific Standard Time, or 10 p.m. Eastern Standard Time, right? So it's going to be premiering at that time and tomorrow, so make sure you guys make sure you guys turn on the notification. I believe you guys can actually hit a button that says notify me on that video. So watch that video, because you guys will know why I chose ARM for the major swing trade idea for this short trading week in the official CFO Swing Watch report newsletter. Okay. All right. So again, hopefully this is a very quick and basic lesson on market vol. Again, a lot of people tend to make it very complicated for some odd reason, but if you want to keep it simple, if you want to be exposed to market volatility, if you want to be exposed to a potential expansion in market vol, well, you can simply long VIX calls. Or if you don't want to do that, if you don't want to be exposed to weird moving premiums, right, on any VIX calls, right, look to the inverse leveraged ETFs like SPXS or simply SQQQ. Right, there are a lot of these instruments out there. I'm not just saying to look at SQQQ or SPXS. These are the two tickers that I always tend to look at. You guys should know that by now if anyone has been subscribed to this channel, or if any of my current CFO Swing Watch readers and members are watching right now. You guys should know this, right? So again, it all also depends on how VIX is moving to determine whether or not you guys want to be exposed to market vol expansion or market vol contraction, and whether or not you want to choose these inverse leveraged ETFs, or simply choosing the VIX calls or VIX puts, or again, simple puts or calls on the overall markets like the S&P 500. It is very simple. It's as simple as I've just described tonight. So I've gotten a lot of questions about market vol in the past and how I've been been so on point, right? With my SQQQ calls, excuse me. I almost said like 4 Qs there. Or SPXS calls, and I've been absolutely on point since last year too, for all of last year actually on both of these two tickers. This is how I do it. I mean, I literally just take a look at the VIX and the overall markets, see where they're at, and focus on whether or not I want to just choose simple puts like I have now. I don't want to be playing SQQQ or SPXS right now based on what I've told you guys tonight and how VIX is looking and how the overall markets are looking, but I am just simply hedged using long-term SPY put contracts. Does that make sense? Okay, so it's as simple as that, guys. I don't know how else to put it. I mean, there's a lot of people out there who want to overcomplicate things for some odd reason, but this is how you can protect yourself from market volatility. All right, so have a great rest of your night, guys. That was it for tonight. I just wanted to do a very quick live stream here for a very short trading week. Hopefully, I can see you guys on Thursday, especially if you guys found this stream very, very useful and most importantly, applicable. So again, hopefully I can see you guys on Thursday at the same time at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Have a great rest of your night, and I really hope that you guys can become a reader of the CFO Stream Watch report and become a private member of the CFO Discord community. Have a great rest of your night.